Okay, good morning, everyone. Looking at the US stock markets, the Dow has again retreated from the recent peak of around the 26,000 psychological level. There was an absence of follow-through by interest beyond that, and subsequently the Dow has pulled back towards the recent low of the 24,250 points. But on last Friday, we are seeing the Dow has violated below the 24,250 points level as the Dow has plunged close to 500 points or negative 2%. The weakness on the Dow Jones or the US stock markets was mainly stemmed by the renewed concern over the global economic growth after the sluggish China industrial production data came in on last Friday. With the Dow falling below the 24,250 points, we are also seeing the Dow has entered into the correction phase. It has fallen more than 10% from the recent all-time high of the 27,000 psychological level. Since then, it has fallen more than 10%. For now, we are expecting the Dow to see further pullback towards the next support located towards the 23,500 points, while any gains will be just limited towards the 25,000 psychological level. Similarly, on the S&P 500, we are seeing the S&P 500 has again retraced from the recent peak of the 2,800 psychological level. Since then, the S&P 500 has tanked towards the recent low. It has also fallen just marginally below the 2,600 psychological level on last Friday. For now, with the 2,600 level unable to hold, we could expect further downside on the S&P 500 towards the next support level of the 2550. In the meantime, any gains will be just likely to be capped towards the 2700 psychological level on the S&P 500. All in all, both the S&P 500 and the Dow has been forming the lower high and also the lower low formation, implying that the downtrend is intact at current juncture. If you look at the moving average line, the EMA 20 is below the 60 and also below the 120 level, implying that the downtrend is intact. Some of this on the crude prices. The crude prices has again ended a volatile trading session after the bearish flag formation break below the 55. Since then, we are seeing a very volatile trading session on the crude prices as it hovers between the 50 towards the 55 US dollars per barrel level. We are also seeing some of the very large body candles being formed over the past 1 month trading period. For now, let's monitor for either way of the breakout. Should there be a breakout above the 55 and a closing above that, we could expect the crude prices to see just a technical recovery with gains likely to be limited towards the 58 or even towards the 60. In the meantime, a pullback below the 50 will see another wave of a correction on the crude prices towards the 45 or even towards the 40 US dollars per barrel mark. On last Friday, we are seeing the crude prices has formed the bearish candle after 1-day recovery. The previous session recovery was mainly stemmed by the OPEC and also Russia's decision to cut their production starting from January next year. But the concern over the US shale boom has erased most of its previous sessions gains on the crude prices. Okay, some of this on the local front. The FMKLCI has earlier been traded towards the 1700 psychological level. It has rejected the 1700 or the EMA 20, and subsequently, as the index has pulled back to below the 1670 towards the 1660 level before staging a mild recovery. But the recovery did not last long, as on last Friday, we are seeing the FMKLCI has gapped down and subsequently closed towards its intraday low. For now, we could expect the further downside on the FMKLCI with weakness heading towards the 1660 level. That would be the immediate support level for now. If the 1660 level cannot hold, then we might see further pullback on the FMKLCI towards the 1640 level. In the meantime, should there be any gains on the FMKLCI, gains will need to be capped towards the 1670 or even towards the 1700 psychological level for now. But tracking the gains in the weakness in the Wall Street on last Friday and also the lower crude oil prices, we could expect the FMKLCI continues to slide lower, at least over the near-term period. On the lower liners wise, the FM's market index has also endured a very volatile trading session as the FM's market index continues to slide below the 12,200 points level. There was no recovery on the FM's market index for now. We could expect the low liners to continue to trend lower towards the next support, which is located towards the 11,200 points level. If the 11,200 points level fails to hold, then we might see another wave of a correction towards the 10,000 psychological level on the FBAM's market index. The 10,000 psychological level is also the lowest point since the September, October of 2011. On stocks wise, some of the stocks that become a top four firstly will be Corsan. A lot of rubber related companies has been on the strong consolidation phase despite the negative general market sentiment. We are seeing Corsan has been traded on a sideways manner, being supported along the EMA 120 level since the hitting the recent peak of around the 4 ringgit and 17 cents. For now, on Corsan, we are going to monitor for this short-term symmetrical triangle formation record as the Corsan has retested the 4 ringgit and 41 cents level on last Friday. For now, let's monitor for the breakout above the 4 ringgit and 41 cents, given that there's a lot of accumulation was taking place on Corsan over the past 1 month. Should there be a breakout above the 4 ringgit and 41 cents, we could expect Corsan to trend towards the 459 or even towards the 472. Your stop loss point will be located towards the 4 ringgit and 21 cents level on Corsan. Things appears to be quite positive on Corsan right now. As you can see that the MACD indicator has really turned green, whereas the RSI continues to maintain its stance above the 50 level over the past month trading period. On our MUI industry, our price is still in a downtrend formation, so any recovery from now will be just taken as a technical rebound play. MUI industry has again retreated towards the recent low of around the 14.5 cents level. Since then, price has been traded on a sideways manner towards the recent high of around the 16 cents. And on last Friday, we are seeing price has formed the gap up formation as price closed above the EMA 20 level, accompanied by some of the rising volumes over the past couple of days. With the price closing above the EMA 20 level, we are already seeing the MACD indicator has really issued a buy signal, whereas the RSI has risen above the 50 level as well. With the breakout above the EMA 20 level, let's monitor for the breakout above the 16 cents. Should price breach above the 16 cents, we can trade MUI industry towards the first target price at the 17.5 cents or even towards the 19 cents level. The stop loss point will be located towards the 14.5 cents should there be a breakout above the 16 cents. On our Perak Transit, our price has staged a pullback from the recent peak of 31.5 cents. Yes, earlier hit the 31.5 cents level during the earlier part of the year at the end of mid of February. Subsequently, price has once again hit the 31.5 cents level on the early part of the August before staging a pullback just towards the 25 cents. After touching the 25 cents level on several occasions, we are seeing price has been traded on a sideways manner towards the recent peak of the 27.5 cents. For now, let's monitor for the breakout above the 27.5 cents. Should price breach above the 27.5 cents level, we can trade Perak Transit towards the first target price at the 30.5 cents or even towards the previous double top or triple top formation of around the 31.5 cents level. Your stop loss point will be located towards the 25 cents level if there's a breakout above the 27.5 cents level on Perak Transit. On indicators wise, everything appears to be quite positive as the MACD indicators continues to form the higher high and also the higher low formation over the past 1 month trading period. The RSI also continues to be flirting around the 50 level throughout this period of time. On our IGB REIT, price has again hit the recent peak of around the 1 yen 80 cents level before staging a pullback just towards the 1 ringgit 61 cents. After touching the 1 ringgit 61 cents level, price has been slowly creeping up towards the 1 ringgit 75 cents level before staging a mild consolidation phase. On last Friday, we are seeing a bullish Harami candle being formed on IGB REIT as well. For IGB REIT, over the short-term period, Let's monitor for this short-term trend line breakout above the 1 ringgit and 71 cents. Should price breach and also close above the 171, we can trade IGP rate towards the 176 or even towards the 180. Your stop loss point will be located towards the 1 ringgit and 67 cents level on IGP rate. Last company for the day will be YNH Property. YNH Property has again traded towards the recent peak of around the 1 ringgit and 66 cents level. After touching an intraday high of 166, we are seeing price has pulled back towards the recent low of around the 1 ringgit and 4 cents. With the price plunging towards the 1 ringgit and 4 cents on the next day itself, we are seeing that there was no follow-through selling pressure, and instead price has formed the bullish candle as it recovers all its previous session losses before trading on a sideways manner. For YNH Property right now, the 1 ringgit and 41 cents level, or for 1 ringgit and 40 cents level. Should price breach above the 1 ringgit and 40 cents and also close above that, we can trade our YNH Property towards the first target price at the 160 or even towards the 166. Your stop loss point will be located towards the 133, and if you can take further risk, the final defense will be located towards the 1 ringgit and 27 cents level on YNH Property. If you have any questions, you can put in the chat box and reply shortly. If there's no question for today, then we'll end the morning briefing. Thank you.